Hello and welcome to Investing Confidential. All the data keeps leaning towards recession, sticky inflation. So again, we talk about stagflation, but it's coming, folks. You got to see it. But there are some investment opportunities I'll talk about at the end of this, towards the end of the video, but they're not in the U.S. But let's go right to the data. We had retail sales out today. Not good, down 1% versus expectations of a small downward movement. We've been, if you've been watching the videos, we've been talking about the weak consumer, and it continues. Okay, the consumer in the U.S. is weak, despite, again, you listen to the talking heads, you listen to the White House, you listen to Wall Street. They're all on the same page. They want to tell you the narrative that the economy is good and the consumer is strong. I'm sorry, it's not. You guys listening to these videos, okay, you understand what's going on. Okay, I've been talking about this for a while. This is a consumer-led economy. Most developed countries, like the U.S. and most of the big economies in Europe, they're consumer-led. Okay, and the consumer is done. Okay, so let's go to the videotape. Let's go to the U.S. Consensus Bureau. Okay, let's look at the data. Okay, first of all, here's the release. Okay. Focus on this. Comments down 1%. We knew that, okay? And this number, by the way, this is the most important part of this. The number was revised down, okay? You could see the previous number revised down. This is a theme, folks. This is happening all the time. You get these numbers out and you say, boom, the week before revised down, revised lower. Everything's being revised lower. So the numbers, when they come out, they're not accurate. They're just not accurate. And they keep it, and the revisions are quiet. They're in the notes. No one sees them. They're just not, these numbers are just not believable anymore. Okay. And here's components. Okay. Let's focus on where the weakness was. Gasoline. Okay. And general store merchandise. Okay. Gasoline is something that everyone puts in their car. Unless you've got a Tesla, you're putting gasoline once a week. You're going to the store once or twice a week. Food also down 1%. So everything we do, energy, buying merchandise, food, was down. This is retail sales, folks, down. Okay, so Yellen a couple of days ago says earlier this week says the economy was strong. What data is this moron looking at? Okay, I don't know what data. Okay, she's a flack for the White House. She's a flack for Wall Street. Okay, because she got paid a lot of money during the day to do Wall Street and to do Wall Street, conferences. But what is she looking at? This is insane. Okay. Also, again, this data is skewed positive, but it's not accurate. Look here. Look at this. Look at this. This is the methodology. They're telling you they talk to or they get data from 4,800 firms. Okay. The government itself tells you there's 1.2, 1.3, 1.4 million retail firms. There's a lot more, but let's just go with what the government number says. So we're looking at data. We're trading on data. We're the Fed is looking at data that represents 0.5%, less than half of 1% of stores. How on earth can this be accurate? Where are those stores located? Are they in the East Coast? Most likely in the Northeast. How many are in California? How many are in Montana? How many are in Florida? We don't know this. And this data always leans positive. So the fact that it's negative tells you something. Again, more evidence. Here's Samsung. They make everything related to consumer electronics. Okay. They export everywhere. They sell all over the world. Profits and sales are weak. I showed you last week, again, last video about Taiwan. Taiwan supplies consumer electronic product. They export everywhere, everything from televisions to phones. Big weakness in exports. So Samsung is losing money. Taiwan has export problems. The entire world is weak. Okay, none of this makes sense. Look at monthly U.S. mall visits. This confirms the weakness. Nobody's going to malls. This has nothing to do with the pandemic. Okay. EU retail firms also confirms on a global basis, EU retail sales are collapsing. So it's not just the US. So why is this important? All the big companies in the Dow and the S&P, they're all global companies, folks. Okay, they sell everywhere. So if the consumer is weak in the US, the consumer has literally imploded in Europe, how are these global companies going to show earnings? Okay, they show you they obviously manipulate EPS because of all the buybacks, but the actual numbers, their top line is down and it's continued to trend lower. This is not good for margins, not good for earnings going. They can't manipulate everything forever. Okay, now let's look at small business. Small business is the engine of growth for any developed economy, especially jobs. They generate the most jobs. Okay, here's small business hiring expectations. Okay, you could see it for yourself, going down, going lower. Okay, small business jobs that can't be filled. This data is manipulated. Okay, it's trending lower, but the point of fact is, look at it this way: small business, you put a job on Indeed, it just sits there. Okay, it just sits there and doesn't get taken off. So and they let it sit there. And Indeed loves it to sit there because they make money by it sitting there, and they encourage the companies to keep it there. So this data is not accurate. Okay, small and this is more really bad news. Small business, and has to obviously do with SVP. Small business availability of loans plummeting. There's no loans. Small business not going to grow. The small business is going to fire people. Okay, sales expectations plummeting for small business. How could this be? How could this be a strong economy? How could Janet Yellen sit there with a straight face and say that? Okay, let's look at another more evidence about all this unemployment stuff. Now look at continuing claims. Overall spiking. Okay, and the employment situation in this country is getting worse and worse. But let's look at who's employing people. Okay, who's been the big hiring? Government, hospitality, healthcare. Healthcare meaning, nursing homes, that kind of stuff. These are all low-paying jobs, folks. Okay, low-wage jobs. Look at finance, look at technology, look at real estate, manufacturing. These are the high-paid jobs. They're down big. So yes, there have been overall. So these also manipulate the employment numbers. Okay, the economy is very weak. We're hiring people for low-paid jobs, and we're getting rid of high-paid jobs. I mean, when is this shit going to hit the fan? It's hitting the fan now. Okay, now we got, look, we talked about inflation being up, down. Look what we had yesterday. In Texas, 18,000 cows were killed. That's 20% of the U.S. availability of cows, okay, for milk, for food, whatever it is. This is highly inflationary. We're going to see this in the inflation numbers. Again, we talked about inflation being sticky. This is one of the reasons. Okay, now look at inflation forecast. This is globally versus our GDP. U.S. is running very high inflation and very low growth, about 1%. That's not good. That's not good. Inflation isn't transitory. It's going to be staying this for a while. So we have, essentially, if you adjust our growth for inflation, we are in, as we've been talking about, we have been in recession for a very long time. But the powers that be don't want to show you that. Okay. Again, sticky inflation. We talked about look at the rate of sticky inflation. It's very high. Okay. Now we look at the terminal rate. It plummeted. Now it's back above 5%. Not good. Not good. And the Fed's going to stop. Okay. The Fed's going to pivot very soon, folks. They're under pressure. They're under pressure. Okay. And here's another bad sign. We've had massive inflows into U.S. Treasuries, but the dollar's been weak. Okay, sure, it's been domestic flows, but still, the dollar is weak. The dollar normally is never weak when there's massive inflows into treasuries. So, I mean, when you look at investing, it's about the dollar. It's about looking where people allocate money globally. And the U.S. is going to suffer because the opportunities are going to be overseas. Okay, so let's look at valuations, global valuations. Under the current system, as you can see here, the current valuations, the U.S. is still maybe the most expensive market in the world versus its history where it should be. Okay, where's the opportunities? Here's Japan. Cheaper versus its relative history. And who recently bought Japan? Well, our old friend Warren Buffett. Okay, big time, investing big money in Japan. I mean, if you're not a trader, but you're an investor, you got to look at Japan. Okay, there's ETFs. There's big cap ETFs, small cap ETFs. There are a lot of ADRs out there for Sony big cap stocks. But if Why is Warren Buffett looking at Japan? Japan's got problems. Okay, they got high inflation and artificially low interest rates, but there's tremendous value. Warren Buffett doesn't pay attention to what I talk about. He probably wouldn't be a subscriber to my videos, but he focuses on long-term fundamentals and value. And there is value in Japanese corporates. Okay, they've been operating with very low profit margins for almost 30 years because of very low inflation. Inflation has spiked. This is very good for profit margins. This is why Warren Buffett is coming into Japan despite the crappy macro environment. So over the next 5 to 7 years, on a valuation bottom up basis, there's value in Japan. Okay, so to end the video and summarize, U.S. consumer very weak. Okay, we are sinking fast into a slowdown recession. They call it a slowdown, but it is going to be a recession. And we've got sticky inflation. So we have already entered a stagflation situation, which is terrible for real estate, terrible for stocks. Okay, but some stocks will go up and there'll be rallies, whatever. But I'm just saying the environment is terrible. The opportunities for investors, not traders, rely overseas. Traders can trade any market. So if you're an investor, probably a good time to look at Japan over the next few months. But if you're US centric, you should be concerned and you should be careful out there.